Now, so far we have focused on the market system, but this system is actually only one half of the global economic paradigm. The other half is the monetary system. While the market system deals with the interaction of people gaming for profit across the spectrum of labor, production, and distribution, the monetary system is an underlying set of policies set by financial institutions which create conditions for the market system, among other things. It includes terms we often hear, such as interest rates, loans, debt, the money supply, inflation, etc. And while you might want to pull your hair out listening to the gibberish coming from the monetary economists,
modest preemptive actions can obviate the need of more drastic actions at a later date.
the nature and effect of this system is actually quite simple.
Our economy has, or the global economy has, three basic things that govern it. One is fractional reserve banking, banks printing money out of nothing. It's also based upon compound interest. When you borrow money, you have to pay back more than you borrowed, which means that you, in effect, create money out of thin air, again, which has to be serviced by creating still more money. We live in an infinite growth paradigm. The economic paradigm we live in now is a Ponzi scheme. Nothing grows forever. It's not possible. As a great psychologist, James Hillman, wrote, the only thing that grows in a human body after a certain age is cancer. It's not just the amount of money that has to keep growing, it's the amount of consumers. Consumers to borrow money at interest to generate more money, and obviously that's not possible on a finite planet. People are basically vehicles to just create money, which must create more money to keep the whole thing from falling apart, which is what's happening right now.
There are really only two things anyone needs to know about the monetary system. 1. All money is created out of debt. Money is monetized debt, whether it materialized from treasury bonds, home loan contracts, or credit cards. In other words, if all outstanding debt was to be repaid right now, there would not be $1 in circulation. And 2, interest is charged on virtually all loans made, and the money needed to pay back this interest does not exist in the money supply outright. Only the principal is created by the loans, and the principal is the money supply. So, if all this debt was to be repaid right now, not only would there not be $1 left in circulation, there would also be a gigantic amount of money owed that is literally impossible to pay back, for it does not exist. The consequence of all of this is that two things are inevitable: inflation and bankruptcy. As far as inflation, this can be seen as an historical trend in virtually every country today, and easily tied to its cause, which is the perpetual increase of the money supply, which is required to cover the interest charges and keep the system going. As far as bankruptcy, it comes in the form of debt collapse. This collapse will inevitably occur with a person, a business, or a country, and typically happens when the interest payments are no longer possible to make.